Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a failure below Friday's low, which resulted in a test of the 27 to 29 half support zone, where responsive buyers were active. And at this point, we've pretty much seen a full recovery from the short-term sell side move that we saw here in Globex. So at this point, heading into the open, our directional bias is going to be neutral. And if ES is holding above 38 to 40, and 33 to 35, then buyers can maintain short-term control here, and we can get a test of some of these resistance zones above at 48 to 50 and 57 to 59. Also keep an eye on the Russell. At this point in time, it is leading the short-term reversal to the upside, and it also showed more strength on the smaller time frames on Friday. So if Russell continues to hold at these upper values and actually starts to break out above its high from Friday, then that would be a good signal that ES can easily make it back up to 57 to 59 and even 64.75 to 66.75. On the other hand, if we start seeing more selling come into the Russell, then we could see a pullback in the S&P as well. So right now, the short-term directional bias continues to be very neutral because the market can still resolve to either side. On the larger time frames, we are still trying to figure out whether the breakout that we saw last Thursday is really a legitimate breakout and whether it's really going to remain intact because right now we're pretty much resolving and trying to work through that breakout move. And for that reason, the market can really tip in either direction, and we are going to have to focus more on the real-time signals on the smaller time frames. So, the advanced decline, the NYC tick especially. So keep an eye on the underlying momentum situation because we are going to have to see some continued momentum in order to break through 48 to 50, 52 half, and 57 to 59. So 48 to 50 is really the earliest resistance zone, and that's why it's titled pre-market resistance. And it is a point where we can get some rejection, and off the open, it's a zone to keep an eye on. But given the reversal that we've seen here in the overnight session, if the market's holding above 38 to 40, then you want to be a bit more careful here at the pre-market resistance zone. In the event that we do get continuation in the Russell and we're getting some decent upside momentum, 52 half and 57 to 59, like I said, can quite easily be tested. And 64.75 to 66.75 and beyond is where we can see some more aggressive selling come into the market. And again, keep an eye on that real-time price action and underlying momentum because with this neutral bias, we have to be cautious on the long side and the short side. On the downside, 38 to 40 ideally holds if the buyers are to maintain control. 33 to 35 is the micro bull bear zone. If you start breaking below 38 to 40 and the micro bull bear, then the 27 to 29 zone may not hold anymore because at that point, heading into it, the sell side would be in control and we could be setting up for some lower prices at 21 to 23 and possibly even lower. So, right now, like I said, heading into the open, we're giving still some edge here to the buy side, given the strength in the Russell and given the fact that, ES reversed the entire down move in Globex here and also the larger time frame context, which, has been a little bit more bullish lately. So we are giving a little bit more edge to buyers above 38 to 40, but at the same time, just understand that on the larger time frames, the market is still trying to kind of figure out whether this breakout is going to stick or whether it's going to fail. And if you start seeing more weakness intraday and more signs of failure, then that can lead to long liquidation. And that's exactly why we have to be so neutral with our directional bias. We have to be able to adapt and adjust depending on how the market shapes up in real time. Because right now the directional bias on the larger time frame is really being developed, and for that reason, we have to be very nimble on the day time frame. But I think the Russell will provide a nice heads up on the intraday bias, because TF has recovered quite a bit from the overnight session, as well as from even the selling that we saw on Thursday. And like I said, it's leading to the upside. So you want to see Russell basically breaking out above the high from Friday in order to really support a continuation higher in the other markets. And if you start seeing a strong rejection or failure in the Russell, then we'll need to be a bit more careful here in the S&P as well. So that's really how the day is shaping up. Given this very neutral context, it makes sense to be selective and a little more careful as the market resolves and figures out which way it's really headed. So those are our main ideas heading into the open. Let's see how the market reacts to 38 to 40 here, and we'll take it from there.